Hello everyone, welcome to this short video from Optimal Ninja. Today we're going to be having a look at optimal pivots, specifically how we've enhanced traditional pivot points with statistics, how this can inform your trading decisions, and we'll be looking at some simple setups. So let's get into it. On screen we have a chart of mini Dow futures, Monday the 22nd and Tuesday the 23rd of November 2021. The session hours is US equities RTH and the time zone at the bottom is UTC. For those of you in the US, that's Eastern time plus 5 hours, so this is 8:30 in the morning Eastern time. For the purposes of this presentation, we're using Optimal Renko custom bars. These are set to a fixed setting of 25 ticks, but with a 1-tick breakout requirement. And most importantly, all our bar types use real opens, not synthetic opens. This means that they work correctly with order flow tools and give you greater confidence in backtesting. Now, on to pivot points. Most of us are familiar with these. Pivots have been around almost as long as futures trading itself and are a standard feature of all trading platforms. And of course, NinjaTrader comes with its own version. A very brief recap. Pivot points are intraday price levels plotted on today's session. They're calculated using a formula applied to the prior session high, low and close. There are several different formulas floating around, but we're focusing on the traditional calculation, also known as floor trader pivots. The main pivot point or central pivot is shown here in yellow. These levels above, shown in red, are resistance levels, and these levels below in green are support levels. And the three remaining plots are the prior session high, low and close. Okay, so now we've got pivot points on the screen. How do we trade with them? Well, at this point I'm going to let you into a little secret. None of these pivot levels has a magical power to reverse markets. Now, you'll often see in guides on trading pivots advice to place orders to buy at support pivots and sell at resistance with a stop loss just beyond, and to sit back and count the profits. If you're considering that, I would advise doing some more homework. So often in trading, what is accepted wisdom doesn't actually bear scrutiny, and in fact there are much more effective techniques if we adopt a more creative approach. Or as Steve Jobs once said, don't live with the results of other people's thinking. In other words, it pays to think differently from the crowd. So by now you're probably saying, well, if we can't use them as support and resistance levels, what exactly can we do with them? Why would anyone use them? So let's have a look. The value of pivot points lies in their simplicity. Firstly, as already stated, there is consistency to how they're calculated, and secondly, they occur every day, which means we have frequency and therefore a very large data set. These two characteristics means that pivot points are testable, and from tests we can compile statistics, and from statistics we can glean information to inform our trading. Before we get back to the charts, a little about our testing methodology. We used a 10-year data set in order to cover all types of intraday market structure, that is trend days, cycle days, high and low volatility and price shocks. We ran the tests for ES, NQ and YM on the RTH session hours, and finally we categorized each trading session into subtypes based on the prior session price action and today's open. The purpose of this is to compare the characteristics of today's session with similar situations in the past. In other words, given what happened yesterday and what has happened today on the open, can the past give us hints about market movements today? Now let's have a look at optimal pivots loaded on a chart. I've zoomed in on the Tuesday chart here that we had on the screen earlier. Same bars and pivot levels, only this time with statistics appended to the line plots. Now we have two metrics on each line. Firstly, T, which is the touch rate. This is the percentage of sessions with similar characteristics to the current session in which the market price touched a particular pivot level. So, for instance, we can see the central pivot here was touched at least once on 84.3% of similar sessions, and this first resistance level here was touched at least once on 43.1% of similar sessions, and so on for the other levels. Support 1 was touched 46.4%, and support 2 was touched just 16.3% of prior sessions. We've also compiled these touch rates for the prior close, the prior high and the prior low, so these are marked also. The second metric we have on each level is the close rate, indicated by the letter C. This shows the percentage of prior sessions with an end of session close in each pivot zone. A pivot zone is the space between each pivot and the one immediately above. So the close rate of S2 was 13.1%, which means that the session closed between S2 and S1 just 13.1% of the time. And the close rate of S1 was 34%, which means that the session closed between S1 and the central pivot on 34% of past similar occasions. Now, these figures have strategic implications for creating a game plan for the trading session. For instance, we have a very high probability of reaching the central pivot, but only about 50-50 of reaching S1. Now, that should give you a heads up that looking for longs to the central pivot is probably going to be a better percentage proposition than shorts, given what has happened in these situations in the past. But if you were short, you might note that the probability of touching S2 down here is just 16%, and closing the day in this zone is just 13%. Similarly, breakouts to the downside are not well favoured either. Of those days that do touch S1, only 35% go on to reach S2. This figure is arrived at by comparing the relative touch rates of these two levels. So at this point, we're coming into the opening swing low. We've had a cycling rather than trending market so far. The odds clearly do not favour either holding shorts at this point nor entering them. Conversely, breakouts above the central pivot touch R1 about 51% of the time, so are considerably better statistical propositions than downside breaks. And that concludes part 1 of this video. In part 2, we'll be zooming into the session in greater detail to show how we can use this pivot information in specific trades, notably entry setups, profit targets and stops, and we'll be covering some top tips for trading Renko, all of which I use in my own trading and can help you find higher probability opportunities. If you'd like to see part 2, please head over to our website. The link is in the description below.